Good afternoon. My name is Eddie C, and I'm the author of Trend is Friend. The date today is 14th of November 2002. It's a Monday, and the time is 12:23 p.m., just after the closing of KLCI this afternoon. Welcome to Purchase Rationale. Purchase Rationale provides 15 reasons when considering a particular stock. I must state a disclaimer though. Whatever I share here is purely for information and education. If you should consider to take action to buy a particular stock, please first consult your financial planner or your broker. The stock in question today is Teo Guan Lee Corporation, TGL, stock code 9369. Of course, this particular stock was not listed in my stock pick last evening. It's just that this morning the market has been rather slow and I was looking for alternative stock, and Teo Guan Lee seems to be the only one worth my attention. And the criteria for TGL 9369 as being the best stock pick is based on number one, price gain, trend confirmation, the momentum is above the Ichimoku cloud, and MA233. It has a relative volume bigger than 1, though the volume is not big since it has been going sideways since last July. Okay, though the volume is small, but it actually hit the average 90 days and above. And it is a profitable net cash company. Okay, let's take a look at the fundamental side of it. Let's take an overview. All right. Now, if you look at the overview on the income statement on the annual basis, the profit margin, which is the orange line, since 2020, 2021, and 2022, you can see that there is an ascending annual profit. The profit has been going up, though the price have been going sideways. And on the balance sheet, the debt to asset has come down from 2020, and now actually the debt is slightly below the 50% mark of the total asset, uh, meaning that the management has managed over the pandemic period, able to control and manage its cash flow well, right? Debt well, sorry. And on the cash flow side, you can see that from the operating profit, it is also on an upward movement, meaning the business has already come back and is generating enough profit to be able to put them into retained earning and increase cash flow. All right. And from the dividend side, TGL pays out about 26% of its earning as payout ratio. Uh, Dividend yield is roughly on a trailing 12-month basis 3.72%, which is quite handsome. Okay, let's look at the statements and statistics side. Go to statistics, and then we go to annual. We look at the current, right? Current. And let's, as usual, calculate the intrinsic value of uh, Teo Guan Lee, TGL. Okay. The intrinsic value of TGL is calculated by looking at the enterprise value divided by the total common shares outstanding. The enterprise value is 5295 million divided by the total number of share is 8322, and that gives us an intrinsic value of 64 cent 64 cent compared to its current trading price at the close of the market this afternoon at 12:30. It is trading close at 1 ringgit and 23 cent. So it looks like you are paying a premium. Okay, double up premium. How much is that difference? Okay, 64 cent minus 123. Okay, you are paying a differential of 59 cent. That's quite a lot, huh? Okay. And in terms of percentage differential is 59 cent divided by 1.23. So buying at 1 ringgit and 23 cent means that we are paying a premium of 48%. Okay. So the question is 48% still worth buying? That for that we have to look at the operating earning yield. Okay, the operating earning yield. Okay, what it means is that operating earning yield is actually derived from the net operating earning divided by the market cap, meaning it has factored in the market price of the share. And even with that factor in, it is still yielding an operating earning yield of 18%, meaning the operating profit is more than able to cover the current price. Moreover, we can also see that it has a healthy operating margin of 12.67%. Okay, uh, for my TIF investing group members, I mentioned to you, remember I introduced the book by Joel Greenblatt, all right? And he speaks about this particular indicator called the magic formula. So today I'm just going to show you that actually I do also use this particular indicator and I'm applying it to my discussion now. Okay, the magic formula is actually uh, taking the ROA, the return on asset. The return on asset take into all aspect of, let's say, the productivity of workers, the expertise of the managers, the efficiency of the machines, the technology they employ, the facility that they use, the labor that they employ, whether they are of high quality, and also the know-how of production process. Okay, they employ everything. It's all factored into the utility of asset. So ROA shows about a 12% return on asset against the current PE. PE is the current price of even $1.21 against the earning of is only 6.33. So to actually roughly have an idea whether the magic formula is good or not is you take this particular figure of ROA divided by the PE. In this case, it is about 2 One is the middle figure. Anything above one, you are consider that that is actually a very well run company. Okay, since this is two, you can see that Teo Guan Li has a good magic formula at two. My standard is one and above. So Teo Guan Li performs pretty efficiently and effectively. So you have know something about their magic formula now. Thanks to, of course, Joel Greenblatt. All right. Price earning ratio is not revealed here. Normally, Jiran will just do a forecast or projection of the forward PE ratio. If it is upward, meaning that you can expect a future price forward of getting higher. What I like is basically besides Joel Greenblatt, there is another guru that I follow by the name of Tobias Carlyle's, and he is the one who propounded the concept of acquirers multiple. Okay, acquirers multiple in mergers and acquisition. The question always asked is, when I buy a company at this particular price, am I buying at a fair price or not? So the enterprise value divided by the EBITDA ratio is actually the indicator. It is also called the acquirers multiple, as propounded by Tobias Carlyle. So anything below 10 is excellent. Look at Teo Guan Li, 2.12. Actually, you are getting at a bargain, even though it is above, twice above the intrinsic value at the current market price. All right, let's go on. Dividend yield, 4.67%, good. At least it still pay a dividend, especially for retirees like us who need some form of income stream, receiving some money from the company. All right. Free cash flow positive with 27 million in the bank. Net debt minus 50, minus 49. Okay. It just indicate that TGL is a net cash company. It has no bad debt. Excuse me. Okay. Sorry about that. All right. The F score, which is actually the performance delivery score, looks good at 7. Anything above 6 is already considered good. 7 is excellent. All right. So looks like TGL in the recent 2 years after the pandemic is delivering the results. Okay. The Altman score 4.22, also excellent. My standard is 2.5. They score 4.22. So it looks like TGL is never not going to go bankrupt in the next 2 years or so. All right. The by niche M score, which is actually indicative of whether the accounts are manipulated. So at minus 2.89, it passed the mark. The normal standard is minus 2.5. So generally, you can see Teo Guan Li is a fundamentally sound company. I would also say that it is a good investment grade stock. But let's look at the sentiment of the market against Teo Guan Li. And for that, we have to look at the technical charting of Teo Guan Li. All right. So from the chart, we can see that number one, there is actually a trend forming. One, two, three, four. Although from last June to July, uh, the price action has been going sideways. All right, until now. But today it has broken the resistance. All right, broken the resistance. So this is a squeeze breakout strategy, uh, and momentum wise, Momentum wise, you can see that Teo Guan Li is above the cloud and also above the 2MA233 line, this particular green line here. It just break out, and it is riding now on wave 3. Okay, on this wave 3. Okay, and it has still quite a range to go to reach the apex of wave 3, the Elio wave 3. And so on a reward to risk basis, let's take the apex of wave 3 as the first target. And if we buy Teo Guan Li at 1 ringgit and 23 with a target price of 2 ringgit and 72, 2 ringgit 72 with a cut loss of 95 cents, it will yield a reward to risk ratio of 5 times, 5.4 times. More than excellent. Okay? All right. And as of today, even though I say the volume was not so good, but even though it is small, it has reached the relative volume of greater than 1, meaning it did reach the average 90 days average volume, meaning that this is indicative of a buyer's intact market. So even though even though the interest is not there for the moment, but the moment the action is starting. All right, starting. Okay, this is what I have to share today. If you think my video and my sharing is educational and informational and is good for you, kindly help me to like, share, and also subscribe. Okay, if you subscribe, you will automatically be listed under my subscribers list, and I will be able to put you as a free club member. Okay, but to do that, kindly send me a hello message in Telegram to this particular number 6018 248 0286, so I may add you into the Trend is Friend Investing Club. It is a free membership, and if you join this particular club, you will be receiving my video which I made like this to you without even bothering to search for it in YouTube again. So kindly please subscribe. Thank you very much. Have a good day, and